thing I want to talk about is how we close the fiscal year in AX. This is fairly standard for most of you, but what we typically receive is a lot of questions about the different setups and what is the 13th period. So I thought I'll show you this briefly in AX to clarify that for hopefully. So when I go into AX and under my general ledger module, we run the fiscal year close under the periodic section and here under the fiscal year close. Now we have the main option here, which is our opening transactions. The opening transaction job will generate our opening balances. When we opening this form, we notice there's a few generic settings here. These settings are controlled out of our general ledger parameters, so we don't actually control the settings from this form. This is just an indication what the system will do when we run this job. A lot of customers ask me the difference between these settings. Create closing transaction during transfer and delete close of year transaction during transfer. Well, a lot of companies are opting out to use what we call a 13th period. The 13th period allows us to use a separate ledger or period to do our year-end adjustments. Typically when we want to do adjustments to the retained earnings account or the equity sections of the chart, we want to do them on a separate period than our normal end period of the financial year because we also have a month end to deal with. And this is what that controls. So when I select to create closing transaction, that will actually create the transactions in my 13th period, and I can then choose to adjust them with using the closing sheet. Now, you may see some fields here that you may not be familiar to, and this is also because we are using the public sector in this example company. So what most of you will see when you run this job in your system is you will just see the fiscal year, and you will have an option to put in what GL account that will be used for your opening balances. Before I go into the closing sheet, I also want to highlight here that we have a setting here called opening to closing. When we run the closing transactions, and we want to rerun this job, as you all know, there could be changes occurring during the year-end process. We can select reset to cancel the previous opening balances job. So again, I want to go back and talk a little bit about the closing sheet in AX. There's not a lot of companies using this feature. Unfortunately, it's quite a nifty feature. What it allows us to do, as I mentioned, is that we can generate transaction directly into a 13th period in the system. Now, what we notice here is that we have a type that is called closing. What I do is I enter description for what the closing sheet is, and then after this, I go into my closing accounts, and of course I need to put in the end date to my financial year, and I then, so let me do that. As you also notice, the date format for this company is not American, so therefore I'm just going to use the calendar selected date. So when I go into close an account, I can then load my the accounts I would wish to adjust using in the closing period, and I can then enter the amount that I want to adjust. And once I've done this, I just post a closing sheet. If you want more details about this, please contact us and we can give you a more detailed demonstration on this area. And as I mentioned, if you want to change the settings for running the financial year end, you go into your general ledger parameters, and under here you will see the settings for the fiscal year close at the end of the form here. And here is where we control open up this form here, and this is where we say that whether we want to create a closing transaction to a transfer or not. We also have the setting here, voucher number must be filled in, and this is typical. That will just generate a closing transaction for you. Okay. Moving on, we're going to go to the next step on the agenda. So I'm just going to swap back to my PowerPoint presentation. The next step I'm going to talk about is a little bit about AR and AP. The year-end is an excellent opportunity to clear up any small remaining balances on your AR and AP. Also, obviously, you want to do a revise of any old debt or old liabilities that's been sitting there and clear those out. Now, this is a trick that I usually teach my customer that many is not aware of that you can do. So in AX, we can use our payment journal both under AR and AP to run a payment proposal to write off small debts. So I'm not going to go into detail to run this job, but I'm just going to talk to it and show you where to do that in the system. So let us go back to the system and show where I do this. So I'm going to start under the accounts receivable module and show here. So under accounts receivable and common and our payment tab and payment journal, we know that we process our payments. We use the option enter payments. What I'm going to do instead, I'm just going to create a normal journal. And from the journal, I'm going to go in directly. So see here, there's a lot of open journals in this entity. So what I'm doing is I'm creating a new journal. And instead of entering payments, I go directly into lines. And from lines, we can go to the button payment proposal. This is something you're probably familiar using when you run your accounts payable payments. Now, the difference in this area we're going to do is instead of doing a run on date, etc., what we're going to do is we're going to go into the select button, and on the customer transaction table, I'm simply just going to select to the amount field. And obviously, if you run transaction in foreign currencies, you can also filter on the foreign currency amount. And then you just enter using more than less than, and enter an amount that you want to say that you want to remove any, filter out any transactions that is less than $1. Then you just enter less than $1 and go OK, and then run the payment proposal. As I said, I'm not going to actually run this job, but just to show the concept of how to do this. Now, what you want to do after you've done this is going to update your offset account. So instead of using offset account type of bank, you'll change it to ledger, and you enter your account for write-offs or roundings or whatever you choose to use. This process, you can order accounts payable for your small balances there. If you want to do larger write-offs, I recommend you to instead use either a GL journal and process a formal write-off against the customer account and use the settlement feature there. Okay, so we're going to move on, and we are now going to talk about our subledger and ledger reconciliation. We recommend that you run these reconciliation reports on a monthly basis when you do your month-end reconciliation, but as a minimum, you are recommended to do this when you do your year-end. Now, the key modules in AX, there is standard reports that you can run out of the box that you'll find under General Ledger. There's, however, a few reports that you may or may not be aware of exist under the other modules that you can use, and more so is under inventory, which is very useful to do a reconciliation of inventory value and COGS. So I'm going to talk through that as well. So I'm going to go in back to AX. And let us start off in the General Ledger area. So under General Ledger and our reports, we have a folder called Reconciliation. Here we find multiple modules where the system will have standard out-of-the-box reports to reconcile. So for instance, if I look at customer, I will here have a report for AR reconciliation. What these reports does is they basically go through and look at your sub-ledger balances compared to your ledger balances. And you can then filter between a date range, or you can also filter on different posting profiles if you have multiple set up under accounts receivable. And you can then display differences only is typical what we show. This report should come up as blank. They should show no differences. If you do have differences, this is where you need to dig down into your ledger and subledger to understand where these differences originate from. You can then choose to include details, and that will give you the detailed transactions to hopefully assist in finding what the difference is. And you may ask yourself, how come I will have differences between my ledger and subledger? Because you probably were told during your implementation that you can't get any differences between your subledger and ledger. That is absolutely correct. What we find when we meet with our customers is that sometimes at desperate times, people need to get their transactions into balance, and what they do is they go into their control accounts. So for instance, our accounts receivable control account, and they go in and remove the tick box, do not allow manual entry. And this will allow people, the system to have a disbalance between them. So also part of your year end, you should probably revise to make sure that these control accounts don't allow manual entry. So going back to our reports, we can also look further and see that we have the same type of reports for vendor. I also have the same type of reports for bank. There's additional reports under specification, but I can look at open ledger transactions and transaction origin. These reports assist in investigating differences that you spot. So please have a look. Now, when we look at this, you also notice there's a tab here for sales tax, and this is just a side set. If you are using, and this is probably more so for our Canadian customers than the U.S. customers, we all know that the U.S. tax rules have very various rules in each state and each tax jurisdiction. So many of you are using add-on solutions for that. But if you are running sales tax within AX, you will find these sales tax reports very helpful, not only for your month end, but also for your year end to understand if there are any deviations. Having that said, we're now going to go in and look to the inventory reports. Now, it's quite an often question we get to our support is, how do I reconcile my inventory GL to my inventory accounts? For you who run previous versions of Dynamics AX, 2009 and version 4, you probably know there is a very good report that shows inventory value. This report was removed in 2012, and instead it was replaced by a new report called Inventory Value Report. And this is a configurable report. You will find it under Inventory Management. And we can look at both the settings. So first of all, we run the reports under my default report setting here, under Status and Inventory Value. And we can see here that we have multiple reports amongst inventory value statement with standard cost breakdown if you use run stock, etc., and the inventory value report itself. When you open up this report, you notice here that you select an ID. And as I mentioned, these are configurable options, so you should make sure that you have these set up. If you don't have these set up, please contact our support or contact your account manager who can schedule a consultant to assist. I'm going to talk a little bit about the setup, but you should have assistance from a consultant if you don't have these set up. So under this setup area, I see a tab called costing, and this is obviously where we also set up the costing settings if I use standard cost, but we also see here you have a setting for inventory value reports. And here is where you can create your different options that you can run. And we'll see that we have quite a few settings that we can apply. So for instance, we have a report here that I'm going to use an example of inventory WIP plus GL. We can define default setting for what period we want to use. So as we notice here, it's actually using the default period interval codes that I set up on the GL. So if you run this for your financial year, you obviously select current year, and you want to look at the range for the posting date. Under the dimension set here, we want to look at your main account, depending again on what you want to reconcile. So for instance, if you are aiming to reconcile, let's say that you have multiple sites and you track costing by site, you probably want to include whatever dimension you use to map to site, commonly business unit. So you might want to have a dimension set main account plus business unit, for instance. In this example, I'm simply going to use the bank account as a setup. We then define the setup for the column. So for instance, here is the type of cost we include in the report. So whether it's inventory, and in this case it's WIP, so this is going to give you the inventory value and WIP, so that means any production or work in progress. You also see you have the option here of running a report on COGS. Many of you have probably looked at a report to do this, so you can then create the same report and just looks at the COGS to reconcile to cost of goods sold. What you also want to include then is the account, the main account. So one of the downsides with this report is that you can only define one account at a time. So if you have multiple inventory accounts, you do need to run this report multiple times. You also see you have the ability to run this by inventory dimension. This is obviously dictated with what level you track costing. So if you track costing at site level, you obviously need to set to track site as a status here. And if you also track it by the inventory dimensions, size, color, etc., you need to include this as well. We also have the ability to print total by resource ID and resource group. Now, resource ID will actually mean that you track it by item, and resource group will actually mean that you track it by item group. So typically here we include item group. Then we have some setting to run the report. The more detail you include in the report, the slower the report is going to be to run. So be aware that if you run it for the whole year, you probably only want to run it for on a summarized level and not include any details. And if you find any deviations, then you can run the report on a more detailed level with a shorter or more defined selection criteria. You also want to include the details for the rows. And when we look at pure inventory reconciliation for material, we tick only the material box. If we also use this report to include bills of materials and production orders, we want to include labor, direct, indirect cost. And in the unlengthy event, you also use outsourcing, production outsourcing. You may want to include that as well. And again, as I said, the key level here when you run it for the whole year is to make sure that you have totals specified here and not transactions, because you will probably wait for the report to run for a few days. So as you notice that this is quite a useful report, and you can configure multiple reports they can use for different purposes. And again, not only for your year-end, but also for your month-end or during the month-end. What you need to be mindful about is that this will also be possible to include running average. And as you know, that AX runs everything to running average until you run your inventory close. So be mindful of that. We talk more about that when we get into the inventory close section here. So what we typically can do is we can run then we can also run a physical value for a report on the physical status of the inventory, and I can then compare the two with my GL. So that's how we do that. I'm going to go back to the accounts, the general ledger module again, and talk about these reports. So these reports that we use to reconcile subledger to ledger, they will give you GL versus subledger balance, whereas the inventory balance report, for instance, will only give you the subledger balances. So to compare that, I really urge you to look into the trial balance report. And for you who haven't upgraded to the latest R2 version, or now R3 is released, there's a quite good feature that was introduced here where you can display amounts numbers segmented into segment columns. I know that many that is running earlier versions of AX 2012 sometimes frustrated that when I run these based on the dimensions set, it didn't break them out, so it included the whole segment, as we can see when I change the selection option here. But when I click this segmented, it makes it easy to then just export this to Excel and pull it out. So you can then filter the trial balance on the same dates as you filter your inventory value report, or whether it's your project report, to reconcile back to ledger, and you can just easily export it to Excel and apply filters there. And as you know, any list forms that you look at, so for instance this, I can just press Control-T to export this report into Microsoft Excel. So finally, we've got full integration with the Office tool in AX. So this is a sidetrack. I'm sure you already knew about it, but we're all finance consultants and Excel lovers, so this is a good trick for you. Okay, so part of your year-end is also to look at your to do your accruals. Now, one of the good things or easy ways to do accruals in AX is to use the reversing journal. I'm sure you use this for your month-end transactions, but if that the case is not, let me just quickly show you how I can use the reversing journals in AX. Now for you, if there's anyone on the phone that uses the Eclipse utilities, you know that there was a separate feature for reversing journals in the utilities, but there also is a standard out-of-the-box feature in AX for this. So when I'm opening up my normal daily general journal and going to lines, the system will have here a tick box called reversing entry. And that, when I tick this box, it allows me to enter a reversing date, which will obviously be the first date of the following month. The system will then automatically do the reversal to reverse it out the following month. One tip that I do is obviously the system doesn't like when I tick the box and not put in a date. So let me remove that so I can close. One of the things I recommend my clients to do is to have a separate journal type for your month-end accruals. This gives you an ability to have a separate number sequence for your month-end adjustments compared to your monthly transactions. So to give you some guidance on that, under the setup, you will find journal names, and you can then here simply create a new journal type of the type daily and attach a new number sequence, and off you go. During the year-end, it's also a good opportunity to revise your allocation rules if you have any specified on your chart of accounts. So as you know, there are automatic allocations you can activate from a GL account, but you also have periodic allocations in the system that you can set up under posting and accrual schemas and ledger allocation rules. So these can be good to revise before you start your new fiscal year. Okay, we're moving forward, and we're going to go into what I need to think about in the fixed asset module. Now, obviously, during the month, you process your acquisitions and your depreciations and any scraps there is to do. Many companies don't process their tax depreciation on a monthly basis and do so on a yearly basis. So this is a good reminder to do so. Many of our customers in the U.S. are not using the depreciation books. They're using the tax layer. The difference, so this may not apply to you, but it may be an interesting option for you to consider. So the depreciation books in AX is an option to, instead of posting into the GL, it just posts it into a separate table, or it doesn't affect the GL per se, but it just leaves it in the subledger. And the depreciation books are separated from the value models. So I'm going to go into my fixed asset module and just quickly look at the fixed asset on how I can see this. And apologies, went to the journal instead of the asset. So again here, when I look at the fixed asset, what we notice is that I have two options here. The common option is that I go into depreciation to the value model, and here I have the different value models. And typically in the US, we use the tax layer. But what you do have as an option is to use depreciation book instead, and this works the same way as the value model, but it doesn't post into GL. If I run this, and I don't do this on a monthly basis, what I'm going to make sure is I run my depreciation book transactions. So on the area page, we see under journals, I have my fixed asset journals, and I also find a depreciation book journal. So same functionality as my fixed asset journal, with the difference is that you see there is no GL accounts. There's no account types, but I have the same transaction types. And here I can then select if I need to do acquisition proposals or depreciation proposals to bring them in and update the tax depreciation. Okay, that leads us into talk to the inventory close area. Now, inventory close, again, is not specific to the year end, but it definitely comes to its head to make sure that you've properly closed your inventory to get your proper costing. As you know, that AX runs on a perpetual value base in costing, and therefore, until you run inventory close, it hasn't applied the costing method you're using. The more often you run it, the more accurate your inventory value is going to be. However, this becomes more so important at the year end. So let us look through what the different options are. Now, AX makes it fairly easy for us to run this because it actually comes up with the 3 different steps you need to perform when you do your inventory close. So I just check this out into the system. We find the inventory close under the inventory management module and periodic. Here we have an option called closing and adjustment. And with receipts, we've got different option in the top where we create our closing. And when I start with this, I don't create new anything. I just go in and follow the steps. The first thing the system wants us to do is check open quantities. And open quantities means the system is going to give you a report on any open POs that has been receipted but not issued, or any open journals that's sitting with transfer orders between. As you know, the system will not close a transaction until it's fully settled. So that means the system, during the closing procedure, is matching your issues against your receipts. And for the system to do a full settlement, the receipt i.e. your PO receipt or your transfer order or your inventory journals need to be financially updated. And financially updating means that the invoice has been processed. When that has happened, the system will match the issuing part, i.e. your sales orders or your other transfer journals, for instance, and it will apply the costing to that transaction. The least open transaction you have, the more accurate your inventory cost is going to be. Obviously, we live in a real world and not the ideal world, so we know that there are going to be open POs, there are going to be open orders that we can't close because we haven't received the invoice or we haven't had time to process the receipts, etc. That's natural, but we want to make sure we minimize them at year end, and we want to know what these are. Obviously, during this period, you will also run your stock take to get your accurate cost quantities on hand, and also to therefore get any write-offs that will be required. If you are running standard cost, you may also want to run the check of your cost prices. And this report, not only, it can also be good to do if you're running FIFO or date-weighted average, because it will also give you an indication where you have huge fluctuations in your cost. This can happen if you, for any reason, do a very expensive purchase of an item that's regularly cheap, but this would be red flags for you when you run your closing procedure. The final option is to close your inventory. This is when the system will perform the different postings that is required. It will also give you a report in the end where you can see what adjustments has been done, and if any of these adjustments is not according to your liking, or you spot that there's been a mistake, that somebody, for whatever reason, has, let's say, used a negative price instead of a negative quantity, this can create big variances in your costing, or somebody has changed costing, etc. That will give us the option to rectify them by using the adjustment. Okay, that gives us to the next step, which is quickly talking a little bit about the changes we need to do in projects. I just want to step back. So when we talk about inventory and looking at open orders, this obviously also includes your production orders. You want to make sure to end as many of them as possible. So with the production order, we have two statuses, finished and ended. Ended would be the final stage of your production order that will complete the costing for them as well. Okay, so next step is project management and accounting. Now, you're running your project management, obviously you need to, if you run fixed price projects, make sure to run your estimates and elimination. Also, if you're running fixed price using time and material type projects, this is a good chance to also remember to run your post-cost and post-project accrued project revenue. So going back into AX under the project management and accounting module, I just want to step through what the different options to run these steps from is. This seems to have lost the icon. So there's different options of running the estimates and eliminations. I can either run them as a periodic job under the periodic module for all the projects, or I can do by project. And obviously, I will see this by the different project types. So for instance, this applies to my investment type project, and an investment type project is, for instance, when we capitalize a project into an asset. So if you got a major project and need to capitalize this, you can use the investment type project. Now, when we look at the highlighted project and we go to the manage step, we see that we have the estimates option highlighted. And when I click here, I can then do the search criteria to create the estimates. and post it, and then I can also run the elimination of that. So the estimate will post it to WIP, and the elimination will eliminate it into the acquisition account. One thing to remember, once I've eliminated the system, I can't go back. When I've finalized the capitalization of a investment type project, I cannot change it. So be mindful before you run this step to make sure you've done captured all the cost that is there or any outstanding invoices before you run that final step. If you run time and material projects as a workaround for fixed price projects, you probably also want to remember to post any cost. So this will reverse from WIP to your P&L or accrue any revenue, which will accrue any revenue from your P&L to your WIP. You may also want to run through and close any open projects and that is sitting in progress but has been completed. It's a good opportunity to do this. I also want to talk a little bit about the options of creating a checklist for your list. And I put together some of the topics that I think is important to remember. I recommend you to create your own checklist as well, depending on what functionality you're using in the system. But these can be some of the topics you want to consider. So obviously you want to make sure you've created a new fiscal year before you start. Otherwise, you won't be able to post any transactions as the new year arrives. And you also want to update your date intervals, so the date interval codes. If you have date intervals that are date-specific or hard-coded, these won't apply for the new year, so make sure to go and update them so your report runs correctly. There's various areas in the system where we use calendars. So for instance, we use calendars under projects for timesheet control, for resource planning. We use calendars for managing production, etc. All of these calendars needs to be updated for current years or for the next year, sorry. So this is a good time to do that because otherwise you can't have people doing time reporting not being able to do so at the new year. The same sense, if you're using AX 2012, you know that the introduction was there with physical calendars, so you now have the option to run multiple calendars for your GL and apply to different modules. So you also want to make sure to update your physical calendars under your ledger settings. If you're working with periodic journals where you have your allocated your prepaid expenses, you might want to update them for next year's prepaid expenses if you're sure those invoices are starting to drop in. Another thing that is a golden opportunity, and especially if you're running AX 2012, is to revise your dimension structure. As you know, in 2012, you have the ability to use entity-backed dimensions, i.e. if you want to track a project as a dimension, a customer, a vendor, or employee. All of these are ideally to do at a year-end scenario because, as you know, you can't do it during the financial year as you won't have any historical data, and it can apply difficulties when you're running your management reporting package if you introduce new dimension mid-financial year. But as part of the year-end, it's a good opportunity to do so. If you do start introducing new dimensions, don't forget to also update your account structure and advanced rules, because otherwise you won't be able to post to those dimensions you create. You also probably already started on your budgeting for next year, but if this is not the case, then remember to create your new budget models and budget revision time fences when you're allowed to edit the budgets for next year and your new forecasts. One thing that many companies forget about is the number sequences. If you've been running AX for a few years, you definitely should review to make sure that you got sufficient areas left for your number sequences. because otherwise you will get an error message saying that there is no available numbers in the number sequence, and you would have to create a new number sequence, and it probably looks better to do this at the year end rather than mid-year. This is also a great opportunity to do some housekeeping in AX. Look through all your open journals and remove them. Open journals that are sitting there is consuming number sequences, and if you're a company that wants to make sure you don't have any gaps in your number sequence and your voucher numbers, this is a great opportunity to make sure they are removed, because open journals will create gaps in your GL number sequences or will create jumps that looks weird in the auditor size. It's also a great time to archive old orders. If you've been running the system for a long time, you probably don't have any need of looking at the actual sales order or the purchase order or the journal entry that was made. You're happy with the transactions that was posted from these. There's archive features in AX to run that I can recommend you to revise. Okay. That was a quick run-through of the different topics that you could consider. I'm sure there's other areas that you may want to revise, but have a look through your system and see what so can be. And